Good morning, good evening, good afternoon, wherever you're at, whatever time it is. Thank you for tapping in. Welcome to the Crypto Casuals. I am Stubby,
Kelly. Good evening, casuals.
and today we're just going to be, having a conversation about the ETFs that have recently launched. So let's get straight into it.
Today, ladies and gentlemen, we will be talking about the Bitcoin ETF, which after many long years of waiting has finally been approved. And the actual approval date was January 10th, 2024, even though we're about 2 weeks out now from the actual event.
So BlackRock initially filed for its ETF back in June of last year, 2023. And from that point to now, Bitcoin has ran up about 75%. So leading up to the ETF approvals, many people were saying that it would be a sell the news event, simply because a lot of people were in profit. And upon launching the ETFs, Bitcoin actually went from 45,000 to 49,000 within like an hour. And at that point in time, it then corrected back down to 46,000 and it then started skidding down where at this point it's bottomed out. It looks to be around 38.7K. At the time of this video, Bitcoin's at $42,000 though. But what we've come to see, and as Kelly said, it's been about 2 weeks now since the ETFs actually launched. They got approved on the 10th and they launched on the 11th. A lot of individuals that weren't insiders per se didn't actually expect them to start trading the day after they got approved. They expected there to be some sort of time frame in between, since this is a new asset class to Wall Street. Um, and again, what we've seen since then is Bitcoin, in a sense, sell on the news or on the launch of the ETFs. But an interesting factor that many people were not aware of was that during this price dump, FTX, the exchange that went bankrupt at the end of 2022, dumped $1.1 billion worth of GBTC as soon as they had the chance to when the ETFs got approved. So a lot of this price decline was actually due to a forced liquidation because since FTX is bankrupt, they're looking to liquidate the assets that they had under management to repay the clients, to make their clients whole in any way that they can. So selling their GBTC holdings when the ETFs got approved was one way to do so. Now, since they have announced that they're essentially done selling their shares for the GBTC ETF, we've seen what seems to be a bounce in price. Again, Bitcoin was at 38.7 and now it's at 42,000 at the time of recording. That was 3 days ago. So we'll see how the price action continues in the short term. In the long term, extremely below. In the long term, extremely bullish. Um, but in the short term, these ETF asset managers have acquired over 130,000 Bitcoin over the course of 2 weeks. They're buying almost 10,000 Bitcoin per day, which is more than 10 times the amount of new Bitcoin that are even being mined every day. Because the amount of Bitcoin that are being mined every day is 900. So they're buying 10,000 Bitcoins a day. They're going to find these Bitcoins on over the counter trading desks, on the free market if they have to. But what we're seeing is kind of, steady buying on the asset management side, and the selling is kind of starting to calm down from GBTC.
To reiterate what he said, there's a lot of sell pressure coming from FTX's company, which is causing the price of Bitcoin to go down, while at the same time, Bitcoin is being brought up heavily by these new ETF approved companies like a BlackRock or ARK Shares or Fidelity, for example. But we're starting to see like the sell pressures coming down and what people buying are coming up, and eventually we'll see a flip and the price of Bitcoin will start to go like this. And ladies and gentlemen, we are very close to that flip. the Bitcoin halving is less than 4 months away, in April to be exact.
Yeah, it's actually, they're saying that it's going to be on 420.
That's crazy.
So Kelly, what do you think the benefits are for the ETF approval, or some of them?
One major benefit that I could think of is exposure for the entire, not even Bitcoin, but altcoin market to institutional investors. If you actually look at all of the total money in the world and where it's actually accumulated, it's majorly in assets. And most assets are owned by rich people who would sit more on the side of institutional investor.
So I mean, I definitely see what you're saying, because traditionally most of the wealth that is under management in the United States is by boomers, and older individuals that have had their lifetime to accumulate their wealth, and so that is locked up in these sort of you know slower moving long term vehicles. Like they don't typically rotate capital as fast as a retail investor would, and that is because they have more to lose ultimately. So they're more strategic with their allocations. And what we're seeing now is Bitcoin go from being like a speculative asset to a true investment vehicle that is now without a doubt going to be respected amongst institutions, particularly. They haven't had the ability for the most part to even invest in Bitcoin. If you have a 401k or an IRA, and that holds, 50% or 60% of your net worth, you haven't had the ability to buy Bitcoin with the majority of your net worth. And so, and the rest of it's probably locked up in real estate for most of the people that are, in that age bracket. So what we're seeing again is now Bitcoin become investable to the capital, the big capital, the large amounts of capital that have not previously had the ability to allocate. And since Bitcoin is finite, it is the one asset in which the supply cannot adjust to the demand. So as the demand for this asset increases because more money comes in, more people learn about it, the price can only really increase. With most commodities, as the demand increases, the supply increases so that the price can come down. Like if rice, for example, which is a commodity, if rice has a supply squeeze where there's not that much rice available, then the cost of rice would go up, which would incentivize more people to grow rice. And so then the supply would increase for rice, causing the prices to come down. And it's a cycle that usually occurs with commodities, but not Bitcoin in particular, because it has a hard cap. It's limited in its supply. It's, scarce. It's capped at 21 million.
And just to close out on my earlier point, that the exposure that Bitcoin is now getting from the institutional investors will see gains like we have been unable to see before. If 98% of the money supply was never able to transact in your business before, when that becomes available, your business will see greater gains than ever possible. I mean, massive gains.
And one of the things that make these ETFs different is the redemption mechanisms. What this means is, since these are commodity backed or based ETFs, the underlying asset needs to be present for the shares to be distributed. That is what makes it a spot ETF. The gold ETF, for example, has what's called an in-kind redemption mechanism. So what that means is, if I personally own bricks of gold and I would like to convert those bricks of gold into shares of the gold ETF, I have the ability to send my gold to the authorized participant of the gold ETF, who would then convert my bricks of gold into ETF shares and distribute those ETF shares to me or to my ownership. And in return, or on the other side, if you will, when I choose to, or if I choose to sell those ETF shares in the future, I have the option to redeem those shares for bricks of gold in return, the underlying bricks of gold that made those shares, rather than cash or USD. And that is one of the things that makes commodity-backed ETFs different than equity baskets of ETFs. And so, like the S&P 500, the difference here with these ETFs is that they are not in-kind redemption. They are cash creates and redeems. So that means that what I have to do is, as an investor, is I have to give you BlackRock or Fidelity money, US dollars, and then you have to take those US dollars and go buy Bitcoin on the market and then use those Bitcoin to create the shares and then give me the shares. And then in the future, when I decide to share, or forgive me, when I decide to sell those Bitcoin shares or those ETF shares, I don't get Bitcoin in return, but you as the ETF provider, you then go and sell the underlying Bitcoin that backs those shares that I'm selling. And you then give me the cash that those shares are valued at in exchange. So I'm buying the ETFs with cash, and when I sell the ETFs, I'm getting cash back rather than me being able to send the Bitcoin that I already own to BlackRock and then get ETF shares in return. And then when I choose to, or if I choose to sell the Bitcoin shares from BlackRock or Fidelity, then I get Bitcoin in return. It's cash creates and cash redeems. So that's a difference maker here with these ETFs in particular. And I do think that that's going to change in the future, but likely not within like at least a year, I would say. And the reason why I say that is just because right now the SEC would like to know and understand where all of the Bitcoin is coming from that is backing these ETFs. Because if anybody can send Bitcoin to BlackRock to get ETF shares, then it is technically possible that those Bitcoins could have been used in illicit transactions in the past or used to fund terrorism, et cetera, et cetera. So if all of the Bitcoin is being bought through Coinbase, which most of them have the surveillance sharing agreement with Coinbase, or Fidelity, who's doing all of their Bitcoin operations in-house, then they have the ability to know where all of the Bitcoin came from and know that it wasn't previously used for illicit activity. Also, yeah, and then one of the interesting things about the launch of these ETFs is that they have already passed silver. Like the Bitcoin ETFs have already passed all of the silver ETFs in terms of market cap, and it's only been about 2 weeks since the ETF launched.
And interestingly enough, the Bitcoin ETF even surpassed the gold ETF's total accumulation during its first day and its first 3 days. So that makes Bitcoin, the Bitcoin ETF, the top performing ETF all time, literally through its first 2 weeks since inception, I'll say.
Yeah. Yeah. It is very safe to say that the Bitcoin ETF launch, even with the GBTC sell pressure from FTX, the Bitcoin ETF launch was the greatest ETF launch of all time in the immediate term, in terms of volume and inflow. We'll have to see what happens over the course of the next 6-8 months and then 2 to 5 years.
And ladies and gentlemen, never forget, Bitcoin was specifically built to be a peer-to-peer network, meaning you don't need, if you choose, any third party to facilitate your transaction of Bitcoin. You can simply get Bitcoin from anybody else who has Bitcoin.
This wasn't financial advice, but thank you for tapping in. We'll be back. Like, comment, and subscribe for more content. Peace.
Peace.